Hey, good afternoon, everybody. Bob, Trade Genius, the 29th of September already. Yeah, I'm just going to go through some of the futures charts. I mean, it's just, we're just dealing now with so much news. They're just flooding the market with news just to keep everybody off their game here. And so I'm just going to see where we can have potential opportunities and also just kind of where we are with things. But first of all, anybody that's just joined us over the weekend, thank you. And then make sure if you have one of the bundles as TradingView software, we'll get you set up by tomorrow. And our customer service guys don't work on Sunday. And so just make sure you get us your TradingView name, and we'll get those things turned on for you. Get in the chat room and ask a lot of questions. We're in there all the time. So let's start off with oil, and looking at the person's number right here. It's basically it's consolidation, but it's been leaning down, and it's 50's been holding the mark here. This was, I think, an anomaly with the fake news. I understand Saudi Arabia is trying to generate some more fake news now again to try to push the prices higher again. We're underneath the moving average that I like, which is the 65, but it's holding on this midline here. So it's a neutral pattern, and our moneymaker, I don't really look at it too much when it's neutral. I'm looking for a push down into either the dynamic linear regression down here or on the static linear regression, like what showed here. It pushes down past 2 standard deviations. You have a chance for a run higher, okay? And so when it gets down here, you look for opportunities as well. So, but that's where we are right now. So usually Mondays, Sunday night to Monday, they lift it, and then we'll see if they drift down Tuesday, Wednesday, like they have been, because the oil reports have been bearish. Let's go. Here's zip on due to quick look at the dollar. The dollar's just on a grind. So it's just a nice steady trend higher, and usually that obliterates gold and silver, but it's not. So usually that means there's stress in the marketplace when gold, silver, and the dollar are moving in cahoots. And so the world's in big trouble. Our interest rates are too high compared to the rest of the world to weaken the currency. And I think eventually we're going to see that weaken. Right now, the Federal Reserve's trying to just suck up all the available, treasuries, and trying to keep from lowering that interest rate, which kind of sucks for us because everybody else gets to take advantage of it, like the other sovereigns, but the American consumer does not. It's just typical of Federal Reserve action. Okay, flip over to the ES. ES keeps drifting down here, but I think it had a little bit of I don't know if to call this a hammer, but it was definitely rejecting the low here, and it's on a slight rise trend, and just solid trend, I would say, and so it held here, and now we'll have to see whether or not they could push back up over 3,000, but it's definitely running out of oxygen. So everybody's waiting for this new high to show up to short the heck out of it. So I don't know who's going to disappoint, but money flow is turned back higher on this rejection down. So I probably would think that we're going to push up at least back to 3,000 again. We'll see. I'm leaning bearish because I think every one of these impulses you've been able to fade them here of late. So all right, let's look at gold. So gold's in a really nice trend here. Okay, it's been fighting, but look, we came right back to the moving average. Nice little hammer here on gold. And what they're going to have to do is they're going to have to break this thing down here below 1480, I think, to get people to think that, hey, maybe this gold move's not going to make it, and then see if they could tumble it back down to here. But we'll see. I think a lot of people now are saying, hey, I'm looking for safe haven stuff. But that's where we are right now. So just keep an eye on this. If it bounces back up and it recaptures above this 1543 area, then we're moving higher. But if it breaks down below this, I think it's probably this low right here, 1492, probably anything under 14 like 85 area, then I think then we'll have to look for this next low to be observed, which is $100 tumble. You know, with gold, nothing surprises me anymore. So just keep an eye on that. All right, I'm going to skip copper. I'm going to show you well, quick natural gas. So it had this big burst here going into September, and we started getting some sales signals here. It's in a slight downtrend, but it's catching right here, moving average here again. So we'll have to see what it does. Money flow turned up higher, and we'll see if they can make a swing low here. We bought CHK, and it gave us a buy signal. So we'll see if natural gas is going to make a turn here for weather purposes, and then we'll make our play from there. Nasdaq broke down. We're in TQQ puts. We rolled ours down from 60 to I rolled mine down to 58, and I hedged them a little bit. And so I'm watching the Qs. I think they're going to come under a lot of political pressure. These IPOs are drying up. People are realizing that basically Wall Street's been trying to defraud the retail public by bringing these grossly overvalued products to market that are not ready. But WeWork was a cowbell here, saying, hey, you know, maybe this whole unicorn trade thing is over. None of these companies make money. None of these companies even have a hope to make money. So it's definitely a greater fool trade, which I don't know why the SEC allows companies that cannot show a reasonable path to profitability within a year going public. Why should they even be allowed to go public? You know, these are risky trades that they're supposed to protect us from, and they don't. They want to get them into the ETFs so they can hide in there and they rise in value with as the ETF breathes, and that's been the game. But I think people are not getting smart to it. And the ETF people should just not even let them into the ETF. You know, you shouldn't be allowed to be in an ETF if you're not a profitable company. You should be kicked out. You know, it's just ridiculous. And people are going to find out the hard way here, because a lot of companies in the S&P are not profitable. Okay, they jammed up their interest charges to keep buying stock. And this whole thing is going to just blow up, especially going into any kind of recession or even if growth stalls. These people cannot keep up with the interest payments. They're not generating enough cash. Okay, here's the area that I think is going to be the weakest. Okay, this was that move here, and we have this was I guess a macro trade that unwound. I think they're just trying to get the heck out of the small caps, because they're the ones with the most companies that are not making money, and it could be a really, really, really bad deal here. And I even read reports this weekend that said that IWM could basically be an ETF that truly blows up, which is kind of scary because it's one of the larger ETFs out there. So make sure you check with your RIAs here on what they have you stuck in, because the window and the doors and the fire escapes are pretty small compared to how many people and how many funds are in it. Okay, let's zip on to silver. Silver, nice little hammer here, right at the moving average. Look at this. This is what's called a strong trend. Anything you get over anything over 0.9 for sure, but anything over 0.75, and you get a buy signal, just hang with it as long as this moving average stays alive. Okay, and look at it. And I'm talking about a close below it. So, from right here at 1470 in June, you could still be in this trade. You're still in this trade today at 17. Okay, so there are some some long swings you can get yourself into. Now, me personally, if I'm in a trade that breaks the 2 standard deviation like that and comes back in, I would have got out right here. Okay, so just FYI. So that's the thing to keep in mind. And funny, I hit a fib line too. So this was a beautiful move. So it kind of blew off a little bit, but I think it's gaining ground again. I think it's going to move higher. And let's see what else I want to show you here. Let's go down to, let's take a quick peek at the interest rates. Failed again. We're going to push down again. Be marvelous. Look at this, 0.88 the other way. It's basically sell the rip and sell the rip. So man, that is a nasty looking chart. Good for you if you can borrow at these lower rates. But they've been trying. They tried this push here. This was that unwind, and it failed. So we'll see if they'll try to do another unwind here. But interest rates are, apparently there's no lack of demand for people that want to own the 10-year. And then the last one I'll show you is the VIX. I'll show you QQQ too. So here's the VIX. Climbed up back over. This is dead flat. And when it's dead flat like that, I just look to try to trade the edges. And I play VIX in the short side. So whenever I get a piercing of the, short VXX, short VXX, short VXX, short VXX, it's been a great trade. And if it pushes up again, just remember, above 20 is rare air for the VIX. That doesn't mean it can't go to 20 to 80 like it did in 2008. But the chances are, if you get over 8, if you get over 20 and it fails 20, you take your shot. But you buy things like VXX or UVXY puts or SVXY calls. That way if you're wrong, your risk is absolutely limited, but your upside is uncapped. So you can make a lot of money. And let me show you TQQ because we're in it. And so here it broke down. It got all the way down to 50. What was the low here? It got down to 58.66, and then they drew it back up into the close. But right now, I think the Qs are in trouble. Here's your shoulder, slightly higher head, shoulder. You got this trailing shoulder neckline right here. So if it gets down to 57.50 here before it takes out this, then we can look at a potential 20-point move, 57 down to 37, maybe $35, and it's definitely not out of the realm possibilities, because all the growth is being sucked out. You don't want to own growth stocks when there's no growth, and these guys have all bought shares back to the point where their interest to their debt to equity, debt to asset, debt to cash flows are mind-boggling. I can't believe the board of directors and I can't believe the banks are lending to these people. It's talk about a breach of fiduciary responsibility. Just brutal. These companies are going to have to either they're going to have to raise equity. Not raise equity, raise cash and switch out debt for equity. Okay. Or they're going to have to start paying down debt instead of buying back shares, and then when those things happen, it's pretty painful for the stock, and you're going to see you're going to see some pretty spectacular moves when that starts to happen. So anyway, thanks for listening, and if you want to join us, you can tradelikeagenius.com, doing quite well. Even though Bitcoin has been going crazy, we've had some really good trades on the alts, and our view is that Bitcoin is a long-term macro play for us. Gold and silver are plays, miners are, and then I look for opportunities when I can see them, and then primarily I'm looking now to short the Russell and short the Qs as I can. And I'm going to look to short oil again when it gives me an opportunity. We closed our oil trade, and then I'll look to go long natural gas when I can, because I think they'll have a brutally cold winter, and there's going to be some massive drawdowns. And I think there's going to be, just like what happened 2 years ago, I think it was, when natural gas ripped higher. I think we're going to get one of those moves again too. But anyway, check us out, tradelikeagenius.com, and have fun with us and make some money every day with us. Bye-bye.